London, Alexion Pharmaceuticals has remade its executive ranks over the past year in a bid to turn around its fortunes. But one of the biggest activist hedge funds around thinks that the company's efforts haven't been enough. Elliott Management, which has previously taken on the likes of Samsung and the aluminum parts maker Arcoic, has built a stake in Alexion and has urged the biopharmaceutical company to do more to lift its stock price, according to people with direct knowledge of the matter who were not authorized to speak publicly. If Alexion's management does not take action, from offering more aggressive financial performance guidance to considering strategic alternatives such as selling itself, Elliott could end up taking actions like beginning a proxy fight to claim seats on the company's board, these people added. The deadline for nominating directors is at the end of the month. A spokeswoman for Elliott declined to comment. In a statement, a representative for Alexion said that the company believes in active and constructive dialogue with all of our shareholders, and we value their perspectives. The potential battle between the drug maker, whose market value as of Thursday was $24 billion, and the hedge fund, which oversees $34 billion in assets, demonstrates the continued cloud of activist investors. Such hedge funds now oversee $125 billion in assets, according to hedge fund research, and remain on the hunt for targets on which they can deploy that capital. The latest activist target is Alexion, a 25-year-old biotech whose primary product, Solaris, is used to treat two extremely rare blood disorders. The drug's annual costs to patients can run into the hundreds of thousands of dollars. But the company has been trying to recover after numerous problems under previous management came to light this year, including an internal investigation into Alexion's aggressive sales practices. The company's $8.4 billion takeover of a fellow biopharmaceutical company, Cyagiva, in 2015 has proved to be a failure. Alexion has written off much of the value of Cyagiva's main drug, Calma. In March, the company hired Ludwig Hitzo, the former chief executive of the drug maker Baxalta, as its new leader. Mr. Hitzo quickly replaced much of the senior management team, adding industry veterans like Paul Clancy, formerly Biogen's chief financial officer. Mr. Hitzo has moved aggressively to right-size operations. In September, Alexion announced plans to lay off 20% of its roughly 3,000 employee workforce and rebuild its product pipeline by investing roughly $100 million a year into new treatments. It has added 2 new directors and named a new chairman this year, while 3 incumbents have announced their plans to retire. Annual profits at Alexion, which is based in New Haven but plans to relocate to Boston, have begun to recover from the Cyagiva acquisition. Alexion reported $399 million in net income last year, more than double what it earned in 2015 but still below the $657 million figure from 2014. Analysts have been largely optimistic about the company's future, and hopes are high for Alexion's next drug, Alexion 1210.